You probably have a playbook for success for your fantasy football team, but a losing game for your financial plan. In today's video, we'll reveal how football parallels successful investing.
The strategies and the mindset from the game of football can elevate your investment strategy.
Let's jump in. Like football, successful investing has both offense and defense. We look at it as offense would be owning stocks or equities, and defense would be owning bonds or fixed income. What's your take on that, Matt?
Yeah, I love the strategy and where you're taking at that. I mean, with stocks, this is the thing that's going to keep your portfolio beating inflation.
You're going to score points.
You're going to win. Keeping your purchasing power strong to win the game.
Right.
And then those bonds, though, you want to have that strong defense, though, that when, a bigger team's coming at you to put some cushion on your portfolio.
Right. So market volatility, those bonds are going to protect you. They're going to shore up your defense and make sure that you can get through the storm.
Absolutely.
Right. I love it.
Yeah.
And so sticking with the theme of offense and defense, a football team has different players that play different positions, and each of the positions has a very unique and specific role that it needs to play in order for the team to win. And it's the same concept of asset allocation in your investment portfolio. You're going to have large US companies, small US companies, large international companies, small international companies, emerging markets, REITs. You're going to have treasuries, corporates, fixed income of various degrees. And so that's really like the asset allocation.
Right. The way to compare that to football then is the different positions on a team. We've got quarterbacks, we've got running backs, tight ends, we've got the defense, we've got special teams, and they're all athletes, right? So they could probably play all of these different positions.
Yeah, but I don't want Tom Brady as my running back.
Hey, he's gotten faster over the years. As he's aged, he's gotten faster. So maybe
he's aged well
there.
Yeah.
And so, the way I look at it is there's different companies, American Funds, BlackRock, Vanguard, Dimensional Funds, all of these different fund companies or exchange traded fund companies. They are good at different areas of those markets that you were talking about. So I want my best quarterback playing quarterback. I want my best defense playing defense. I want my best tight end playing tight end. And so build your portfolio or your asset allocation or your fantasy football team or real football team in the same manner.
It's funny is sometimes we see people come in here with portfolios of all Tom Brady or all Patrick Mahomes, meaning they have the same, and right now it's US large growth companies, tech companies, and you can't win if you have 11 Patrick Mahomes on the field. Love that guy, but you got to be diversified.
Right. Your team looks good on paper, but that team can't perform and win a lot of games. Maybe they get lucky every now and then, but it's not a long-term winning strategy.
Right. So speaking of strategy, just as a coach devises plays on the field, an investor or a financial advisor needs to have a strategy that's going to help win in the long run with money. How does that equate to football and financial planning and investing?
Well, maybe with the different percentages that people are playing on the field, how much time are they playing versus how much percent of that asset allocation you have in the portfolio? If people are getting injured, do you need to switch out the underperforming player or the underperforming asset class, things like that?
Right. And then kind of like the rules of football, there's all sorts of rules for financial planning. And so knowing the rules in football means you're going to have a better chance of winning. Knowing the rules in financial planning is the same thing. Give us some examples of some of these rules that can help investors.
Right. So for college football, there's the play clock stops every first down. In NFL, it doesn't. So there's different things that you need to do. And similar in financial planning, in some scenarios, you can do one strategy, for example, Roth conversions, right? Those have to be done by the end of the year in which you want to do it.
Right.
But Roth contributions you're able to do those contributions up until April 15th of the next year.
Right.
So all these little nuances, knowing the rules of the game and using the rules to your advantage can really help out.
Or the backdoor Roth IRA strategy that works really well if your money's in 401ks, but if you have money in traditional IRAs, all of a sudden it renders that strategy less effective.
Absolutely. So using the time clock and the different rules to your advantage in football and in your investment strategy is going to set you up for success.
So football is a violent game. It can be very rough. So can the stock market. In other words, there's a lot of volatility in the stock market. So football comes with injuries, and there's things you can do to prevent injury and illness and try to extend your season or your career. Well, the same can be said for successful investing. Talk to us a little bit about that.
Yeah, so I don't know if any of you have seen an actual roster of a football team, but there's a number of players to play each of these positions. So backups on backups. And you mentioned that there's down markets. Well, in your taxable investment accounts, you maybe have advantageous moments to take advantage of this. And your good player's injured, you may need to replace it with a similar, can't be the same person, but a very similar player to play that position when the other part is down.
This sounds like tax loss harvesting.
Tax loss harvesting, great. And so putting in the similar player may not be your number one choice, but it's still good enough to participate in the game to give you a win in the season.
Right. And the other thing with successful investing and embracing the fact that markets can be volatile. In other words, they can be violent and rough. And that's part of successful investing, is to embrace it. So strategies like tax loss harvesting or selling your fixed income during down markets to buy equities when they're lower, having a game plan to help navigate through some of these injuries, so to speak, is very much like a football team knowing how to get through a long season with having the right players on the team.
And just because there's a down market or injuries on the team doesn't mean that you have to throw away your whole team or throw away your whole portfolio. I mean, that's why you need to just have that prior proper planning to make sure you do have those backups in place to continue the plan over the long term.
That's right. Now, talk to me about the game clock being similar to, how does that apply to financial planning and investing?
So not the most fun subject, but there is an end to the game, and similar to your financial planning, there is an end of your financial plan, and you need to make sure that, because we don't know when the game is going to end, there's timeouts, there's penalties, there's overtime. I mean, we don't know when that ending is. So just be aware of the assumptions you're making in your plan of life expectancy, because you're not sure when your game's going to end.
Absolutely. And so to me, it comes down to life expectancy. How long do we need the portfolio to last? And then also I look at, there's 4 quarters in a game, and it's kind of like in your youth, the first quarter might be getting through college and kind of through your 20s and starting the habit of successful investing. And then the second quarter might be your 30s and 40s, where you start to make more money and do better with your finances. And then that third quarter is your peak earning years, where you're really maxing out your savings. And then the fourth quarter is that transition into the golden years, where you're really just kind of enjoying life and living on the prosperity that you've created. But I really look at successful investing as having 4 quarters, just like football.
Yeah, and that fourth quarter, maybe the golden years and you're slowing down, but if you can be, the backup quarterback or on the bench quarterback, you're still making some successful dollars along the way. So it's not time to hang up the hat.
Right, don't give up in the fourth quarter, right?
That's right.
Fight to the end, fight to win. Okay, so let's talk about teamwork and collaboration in the game of football. In football, you've got a head coach and a lot of assistant coaches. You have a general manager, and we compare that to having a financial advisor and a team of professionals surrounding you, your CPA, your estate planner, your attorney, your medical professional, everybody surrounding you to create a successful outcome. How does that relate to football?
I mean, that's a big part of the game. You always see the coaches on the field. They have their microphones on. They're talking to everyone upstairs to make sure that everyone is doing their specific job to make sure that there are good outcomes in the game. And so similar, like you mentioned, working with your CPAs or the estate planning attorneys or medical, I mean, all of these different positions in your financial plan should be working concurrently to make sure that you have successful outcomes.
Right. I can't tell you how many times I've seen a CPA make a decision because they're looking in the rearview mirror as to what happened last year, but they're not looking forward proactively. And it might be a decent decision on the tax side, but it's not a good decision on the investment side. Conversely, I've seen financial advisors make decisions that they're not aware of the tax implications. I'm thinking of realizing gains, and now all of a sudden the client has to pay more Medicare IRMA on the surcharge. And so really having that coordinated strategic approach, and I can't imagine doing this on your own. I mean, there's so much to know. There's so many rules, so many laws. It's so complex and complicated. A football team has dozens of professionals as part of that coaching staff. They're not doing it alone.
Right.
I don't know how investors can. So just like a football game where there's a lot of energy and the fans are getting into it and just hooting and hollering, investing can be really similar to that, in the sense that the media can be telling you what to do and chirping at you and trying to get you off track or distract you, or trying to get you to join the crowd and do the thing that everybody else is doing. I mean, What's the parallel there, Matt?
Well, I mean, you're saying it perfect, is that the media and the fans, they think they know the game better than the coaches. There's actual video games out there that you can pretend to be the coach, but these people don't actually know all the rules, just like the professionals.
Right.
And so they're watching the news for their financial plans, and they're thinking that this person that's chirping to everybody is speaking directly to them.
Right.
But they don't necessarily know their financial goals, their values, what they're trying to accomplish. So they're trying to scare you to click something or sell something, even though they may not know exactly what's going on underneath the hood.
Yeah. So if you're the home team and the crowd's going wild for you, don't let that make you take too much risk in your investment portfolio. But if you're the away team and that visiting crowd is just really rough on you, don't let that get you down, and don't let that make you deviate from your plan or your course of action. Stay the course and really tune out the noise when it comes to the fans, or in this case, the media, or sometimes it's just a loving family member that thinks they're giving you good advice, but really it's not. So tune it out if you can. So the football season is long, requiring endurance and patience to be successful. The same holds true for investing. You need to be patient, you need to stay the course, you need to be prepared, but you can't freak out when markets do what they do.
Yeah, I mean, just looking at the game of football, there's a lot of games, right?
Yeah.
If you come out and win the first 7 games and then lose the rest of them, then that's not a successful outcome. So just because you're starting off with a winning streak doesn't mean that you're coming out with successful outcomes. So you really need to set yourself up to win throughout the season and all the way to the end.
And in order to do that, successful football teams have a really good playbook. And we equate that to having a financial plan when it comes to investing. If you don't have a financial plan, it's like going on the football field and saying, okay, everybody go long. I'll just throw you the long ball. That doesn't work. So you got to have a plan and you have to execute it.
And then speaking of that, the plan doesn't always go according to plan, right? That's why they have a number of different plays in that play.
Call an audible every now and then.
So that's why it's important to just review that financial plan frequently, at least once a year, to see what's changed in your life, what options do you need to change, what adjustments do you need to change to make sure you still have that successful outcome.
Yeah, maybe the defense is stuff in the box, so we got to change up. We can't run anymore. We got to do some short passes and make adjustments.
Right.
Yeah, I mean, that's where you have to have flexibility in your plan, just like a successful team has flexibility in their play calling. So speaking of having a plan and having a winning playbook, you really need to assess how much risk you're willing to take when it comes to your investing. And sometimes in football, and I think about that Super Bowl where the Seahawks had the ball on the 1 yard line. They were about to beat the Patriots, and they had the best running back in the backfield, Marshawn Lynch. All they had to do was hand the ball to Marshawn, and he's going to just fall over himself into the end zone, and the Seahawks win the Super Bowl. Well, what happens is they elected to take on more risk than they needed. They passed the ball, and the Patriots intercepted the ball in the end zone, and they won the big game. And so I equate this to, in your own investing, make sure that you're taking on the appropriate amount of risk, but certainly not taking too much risk, because it can result in really bad outcomes. I know the Seahawks sure wish that they had taken less risk. They'd be the big winners, but
I mean, just say perfect. For your financial plan and in the investment world, you don't need to take on unnecessary risk to win the game. And it's a game of inches, especially at that moment, literally falling in to win the game. And why go for the high score when you can just have the win?
Right. Don't take too much risk.
Yeah. So we covered a lot today with how football equates to your financial plan. We talked about offense and defense. We talked about the different players on the field and your asset allocation for your portfolio. We talked about the rules of the game. We talked about using the play clock to your advantage and using the rules and regulation in your plan to be successful. And more importantly, we talked about that it's a game of inches, and over the long term, it's a marathon and not a sprint. And you need to win the game throughout your entire life and not just in the moment. So not taking unnecessary risk. So there is a lot that football has to do with financial planning, and I hope you got a lot out of this today.
Yeah, and we also talked about having a successful group of coaches and general managers and front office staff helping successful football teams to win. And so if you're looking to be surrounded by a successful coaching staff and organization, don't hesitate to reach out to us. We have a team of professionals who are happy to help you create a great playbook and help you win at the game of investing and financial planning.
So we'll see you on the next one.